Hello, and welcome to the Jefferson Chamber's Vision and Voice, sponsored by Atmos Energy. We're happy to have you here today. We're going to talk about a very important topic to business owners and to business managers alike. It's the Payroll Protection Program and also the Employee Retention Tax Credits. There's been lots of changes as we are here in the final week of February, and we just want to bring you up to speed on a lot of these changes. It means real money in the bank to your company. It can help you cover payroll, can help you cover your rent and some of your utility costs. So listen closely, pick up some of these tips, and if you have any questions afterwards, contact us here at the Jefferson Chamber at jeffersonchamber.org. So let's get started. We have Kathryn Pittman here and Stephen Blitz, both with the accounting firm of Postlethwaite in Netterville. I believe it's the largest firm in the state of Louisiana, and certainly one of our big supporters, and we appreciate that. So Kathryn is, of course, an attorney with Postlethwaite in Netterville, and Stephen is the CPA. And so we've got some real brain power here today. So what I want to do, I guess, is go back to 2020. A lot happened in 2020, and a lot happened really at the wire, as in 3 days before Christmas, and some things were passed. And so a lot of our members are saying, what happened? What's going on with the Payroll Protection Program? What were the changes in the employee tax credits? Can I go back and get those? And I know the answer is yes, but let's kind of dig into the details. And so, Kathryn, maybe we start with you.
Yeah. So first, I'll just give a little bit of a background about just to set the stage for where we are. In March, obviously, last year, we started seeing the pandemic really taking effect on businesses, and Congress passed what's colloquially known as the CARES Act. And the CARES Act created several different mechanisms to help businesses. One of them was the Paycheck Protection Program, obviously a robust tool. And another one that was less popular at the time was called the Employee Retention Tax Credit, which was also a tax credit that you could get for payroll taxes based on certain wages you paid to your employees. The thing about it in 2020, when it was first passed, was that you were not eligible for both of them at the same time.
It was either or.
It was either or. If you got the PPP, you couldn't get the ERTC, and for most businesses who could qualify for PPP loans, that was a really robust tool. It was much more valuable to them to do that. And then, right around Christmas this year, they passed something called the Consolidated Appropriations Act, which modified some of the PPP program changes, extended those that we'll talk about in a minute, and also modified ERTC and extended it, but modified it so that you could now get it for 2020 if you also had a PPP loan. So you were able to get both. That kind of sets the stage for where we are. So, with PPP in 2020, and then the changes going into 2021.
Right, okay. So where we are in 2020 is that even if you received the PPP, Payroll Protection Program, under some circumstances, you can still qualify to go back and get the employee retention tax credits.
Yeah.
Correct. So now that you got the PPP, if you had met the requirements, which for 2020 ERTC, and it's important to note 2021's ERTC is different rules to qualify. But in 2020 ERTC, there was essentially two different ways to qualify. One is you had either a partial or full shutdown of business. Partial shutdown, think your restaurants. They're still having very strong limitations. Or you had a greater than 50% reduction in one calendar quarter's revenue. So if you did $1 million in Q2 2019, you did $400,000 in Q2 2020, you qualify automatically for that entire quarter. Versus the partial shutdown is only the times that you're actually shut down from business. It is also, I think it's important to go ahead and note, is there is a difference between being shut down and also being a disruption in your business. If you're able to work from home, the guidance that we have received from the IRS, which is very limited, those states that is essentially a disruption in your business, not a sharp shutdown.
Right. Yeah, and that's an important thing, because people say, well, I had to have my employees work from home, these types of things. Well, if you were able to kind of continue your business in a comparable manner, even if you weren't able to go to the office, we always talk about accounting firms, and we had to kind of change business models, but we were able to still continue our services, so we probably don't qualify for that in terms of a full or partial suspension, even though our business model had to change a little bit and we had to pivot like that as well.
Sure. always makes me a little nervous about my tax returns going to people's houses that are working from home, but that, I digress a little bit. So does it, the income, the revenue that you have in 2020 over 2019, does that factor in even if you were able to work from home?
Yes. So if your revenue decreased by more than 50%, you don't have to worry about being shut down or anything else because it's deemed that you've been so affected by COVID.
If your revenue decreased by more than 50%.
By more than 50%.
For the purpose of the 2020 credits.
Okay, 2020, okay.
And so this might be a good time to say, how is the 2021 credit different?
I would just make mention is that the credit for 2020 is a 50% of your qualified wages up to $10,000 for the year. So I think that's just one of the important things to understand is how much we're talking about is $5,000 per employee. So I just completed a calculation for one group, and ended up being about $200,000 of tax credits coming back to them on the Form 941 on the payroll tax. This is not income tax credit; it's a payroll tax credit.
Sure. Okay. And in essence, since you've already paid the tax in 2020, it's really a refund, correct?
Yeah. Yeah, it's completely refundable. The other thing I want to just make note of is that it is really a more robust benefit in 2020 for smaller businesses, because if you had 100 or fewer employees, you were able to claim and you met those requirements you're talking about, significant reduction in gross receipts, or you were subject to full or partial suspension, you're able to get it on any wages that you paid to your employees during those periods. But if you have more than 100 employees for 2020, it's only for wages that you paid if they weren't working. So that is if you paid people, maybe you paid your restaurant folks when they weren't working, or you paid other people who were supposed to be on the manufacturing line but weren't able to go in, but you still paid them anyway. So.
Also health insurance, if you were paying, a lot of restaurants were still paying health insurance for furloughed employees, those dollars are qualifying. The other thing with large employers, it's only at 30 days that they get, versus, if you're a small employer, it's the entire quarters. And once you hit that 50% threshold, you're gonna stay qualified until you've, reached up to 80% of the prior year's quarter, comparative.
Okay. So really strong program.
Yeah, yeah. Although it did for 2020 require significant, for most people, like a really significant reduction in gross receipts.
Right.
Yeah. Okay. Yeah. So now 2021. So how does that differ?
So 2021, they, in December, I told you the Consolidated Appropriations Act, they expanded it and made it more robust. So now for 2021, you can qualify. Currently, it's for the first 2 quarters, but you can qualify if you had only a 20% reduction in gross receipts as compared to a quarter in 2019, so the first or second quarter. You can also choose to look at fourth quarter 2020 as compared to fourth quarter 2019 to qualify. And then the credit is up to 70% of qualified wages, up to $10,000 per quarter. That is so potentially $7,000 per quarter per employee if you qualify. And again, also the full or partial suspension is still there, so your restaurants are still you're still under those things. So it is a very robust thing for 2021, especially. Even if people can't qualify on those gross receipts for 2020, because we have clients like that. They're like, well, we were really at 75%. We didn't get all the way to 50%. We were working remotely, but now they're like, but here in 2021. I do have, we're still not all the way back, and we're meeting those requirements, and so it's a really a big tool for 2021.
Sure, and depending on the business you're in, you may be even roll back with even tighter restrictions than what we were in 2020.
Yeah. I mean, and of course, as we all know, all the COVID regulations are always changing. So.
Always changing. We hope to see more changes soon as our numbers decline here in our region. Other benefits that might be available to employers. What is out there that people just might be missing?
So, obviously PPP2 has been a hot topic. In order to qualify for PPP2, you have to show 1 calendar quarter of 25% or less in 2020. The other thing you have to have is you've got how to get PPP1. So if you didn't get the first PPP loan, you can't get the second one, which for restaurants, hotels, that can be actually more dollars than the first one. The other thing to note though is if you didn't get the first one, you need to go talk to your bank because they are able to allow you to get the first one. So
Okay.
we are seeing a lot of people go in and they didn't get the first one, they're going back and getting it now.
And if I can just interject for a second, so this would be particularly helpful for small businesses, sole proprietors that might have got left out in the first
Yeah.
round.
Correct.
Yeah.
Yeah.
Yes, like
Okay.
Schedule Cs,
Yeah.
right now are easy, easy to qualify, easy to claim. The other thing they did is they simplified the process. If you have under $150,000 loan, then now it's just sign an affidavit to get your forgiveness. It doesn't mean that you're exempt from being looked at,
Right.
but it simplifies this process of giving forgiveness.
Right. Okay.
So that's an important thing. We still recommend, and I believe the guidance from SBA says I believe 4 years you must maintain the
The
documentation.
documentation, yeah.
Yeah. And another thing I'll note is there is some interaction between the PPP and the ERTC, both in the first and second iterations of both of them. But you cannot use, and we'll try not to get too much in the weeds here because this is a little confusing and we're still waiting for some guidance from the IRS. But essentially,
I actually told the audience earlier that you're an attorney and he's a CPA, so it's okay. We'll get in the weeds.
but essentially, you cannot utilize wages that you used for PPP loan forgiveness for ERTC.
Right.
So there's some confusion on, okay, but what if I reported wages on my loan forgiveness application because I've already submitted it for the first round PPP, but I didn't really need to report that many wages, or I didn't need to use that long of a covered period, but I just did because it was easier and it didn't matter because I couldn't qualify for the ERTC. Is there a way now to go back and say, well, I only actually needed to report, I only needed a cover period of 12 weeks instead of 24. Can I go back and kind of utilize those wages for any ERTC credits? And right now, the answer is we don't know. We're hoping the AICPA, I know, has asked the Treasury Department, IRS, to issue guidance on that to help.
Which agency was that you said?
So the AICPA, which is the
American
CPA.
Institute of CPAs.
CPAs, okay. Great.
Yeah, the CPA society nationally has asked for guidance on that as well. So we're hopeful that we'll get guidance there that'll kind of give people some idea, okay, can I use some of those wages even if I already, applied for my PPP forgiveness?
And I think that's been one of the issues all along. I mean, to Congress's credit, they worked very quickly to get this out when all of this first happened. But the devil's always in the details, and so all of those guidance and those pieces of advice that are coming out from the IRS and the Treasury, their guidance and their requirements, they just keep coming, right? I mean, I know for you guys, it's got to be really hectic.
Not only have they keep coming, they keep changing. It's like, and sometimes the changes aren't necessarily items in the actual law, but rather just the way that Treasury wants to interpret it. When they added the limitation of 60% had to be used for 6% of all PPP dollars had to be used for payroll. That wasn't actually in the law. That was just a Treasury change, and then the IRS obviously changed that to 75%. But so a lot of it has been constant changing of the rules that we've been playing with for the last year.
Almost a year now, which is so hard to believe. But yeah, I think that's one thing, and we've tried to help clients, follow the rules that exist at the time that that we're helping them, and try to stay abreast of all the changes as we can. And let clients and business people know throughout the region.
Another program that's still out there is the FMLA credit. It's an optional credit for the first 2 quarters. It's not required to be continued, but if you are continuing to pay your employees, if they get COVID for up to 2 weeks, or maybe their kids are out of school or things like that, that's still out there. If you utilize that and you utilize the PPP and the ERTC, these all interchange with each other.
Okay.
So you can't use the same dollar on multiple programs. And then, so that's another big program that's started with the CARES Act. Well, actually it started before the CARES Act. But, it does still apply. The CAA obviously had a lot of tax changes. Meals are now 100% deductible for restaurants. They did clarify and overrode the IRS that you get, tax exempt income from the PPP loan, but it is all still tax deductible, which was, I think, a very big savings, and was clearly congressional intent from the start.
That was the intent, right?
Yeah, to be able to deduct all the expenses even though it was being forgiven, and so that was a big positive change, and a lot of relief for everyone at the end of last year.
And I think that was really, something that was very accentuated through this whole process, is that a lot of times the intent of Congress doesn't necessarily get carried out with the IRS or even the Treasury and other agencies, and so it was nice that they went back and forced that clarification.
Yes.
Yeah, we had been hearing about it all year that it was going to happen, and so it finally did.
So it was a very relieving day.
Yeah. Well, I know you guys have been really busy, I'm sure, handling Payroll Protection Program, family leave, employee retention tax credits. What's the advice you have for business owners out there, or business managers that are saying, okay, I'm listening to this now, where do I go? Where do I start?
Well, I think that it's important for PPP loan. Obviously, we're equipped to help, and CPAs are equipped to help, and that type of thing. But I think for PPP, a lot of times your bank is also a good resource, whoever you have a banking relationship with. And then the other advice that I would give is don't be afraid to explore the credits, because I think sometimes people are a little bit overwhelmed, and honestly, in all facets of life, a little bit COVID-19 fatigued. Mm-hmm. But there are dollars on the table that you may qualify for, especially in 2021. And I think it's, it would behoove businesses to at least see, like, okay, is some of this money available to me? Am I able to take advantage of that?
Certainly. And I maybe I would add to that, in addition to your accountant, your CPA, and your bank, is perhaps your payroll processor. A lot of the payroll processors are pretty familiar with how to get the tax credits, or at least the formula of what you may qualify for.
Yeah, they may have the data. One thing to make sure of is, the one thing with the processors, they may not have the data from the PPP loans. They may not have the data, of your business operation. So, certainly speaking with your CPA, making sure that you qualify, trying to go down those routes of qualifying and making sure you qualify and then proceed. I mean, again, it can be, 6 figures for many businesses,
right?
With not that don't have 100 employees, that may only have 30 or 40 employees. You could be talking about 6-figure dollars coming back into the bank.
It's huge.
Yes.
Yeah.
It's huge. And I think that's one of the big takeaways from this whole COVID disaster, if you will, is we need to operate our businesses like a business. Okay, we need to have professionals doing our taxes and our planning. We need to work with the banks. We need to be bankable, because when all this happens, the first thing everybody says is, I need to see your tax returns. I need to see your performance. I need to see your financials from last year. And so many small businesses, and look, in Jefferson Parish, about 65% of our businesses in Jefferson Parish have 10 or less employees. So it is real small businesses that aren't maybe as sophisticated as a medium-sized or certainly not a large-sized business. So that's one of the things that we keep pushing back to our members as well. Surround yourself with professionals and go do what you do best,
Right.
which is making the widgets or the gadgets. Whatever it is you do, go do it, but bring in the professionals to help you with the topics that we're talking about today.
Absolutely.
Yeah.
The other, talking about another kind of credit program to be mindful of is there is another credit that we're still waiting on, actually, the form. But Hurricane Zeta was there's a new work opportunity credit if you were shut down because of a federal disaster.
Right.
Think Hurricane Zeta, think what's going on in Texas, with the snow, the storms and stuff.
Yeah.
There is a credit out there that if you are shut down, that you can actually claim a work opportunity credit for federal tax purposes, which can add up again very quickly. I know I was without power for almost a week, with Zeta, so a lot of this area was inoperable,
Right.
and so there's a lot of credits there, but we're still waiting on the tax form
Sure.
to even claim it.
Sure. Well, and you bring up a good point too on the hurricanes, because there are still some credits out there available. I know the other one I think that's still available is the withdrawal from IRA or 401ks without penalty. if it's related to the hurricane. Now that
Yeah.
There's
wasn't,
also one related to COVID as well.
Yes.
but I think the one for COVID expired at the end of the year, if I'm not mistaken.
And I think it was one of the original CARES Act provisions that were probably set to expire.
Yeah.
And there's some talk about bringing
Yeah.
that back, but for now, I know that the hurricane provision is still there.
Yeah.
We field a lot of calls too on some of these things, and
Yeah.
I know there's still a lot of things in play in Congress, and hopefully some
Yeah.
even more attractive packages coming
Yeah,
out.
and I would say is I generally recommend, people to try to look elsewhere before you go into your retirements, because
Yeah.
those are, protected dollars that
Yeah.
can grow tax free. And
Well, and I think that
Sometimes you get
the
on.
talk on the new provision is that it would be for people over the age of 65, which I think is good. Those people have worked; they're pretty much either retired or soon to retire, and they've got money sitting there and they can't get to it without.
right.
And another thing that Stephen and I have been talking about is, obviously there's more COVID relief in the works in the federal government, and of course, some or all these things are subject to change,
Right.
or further extension, perhaps, as we may expect that some of these things might be extended further out past. Most of them are through the first 2 quarters of this year.
Mhm.
The PPP program, the second round loans or the first round loans are set to end March 31st right now. So, but if legislation is passed, to kind of aid business and additional as the country continues to move forward in its pandemic process, these things can change and or provide even more benefits.
Yeah. That's great.
One thing we're seeing is, if you had a better year in 2020 than you did in 2019,
Which has happened.
which the dollars, so much money's coming in. There's a number of businesses that have actually done better. You may want to look at pushing back when you file your tax returns, not when you pay the taxes, but when you file the returns. Because if you're qualifying for some of the individual relief now, you would potentially get knocked out of any future relief.
Right.
It's very clear that more action's going to happen.
Yep.
What exactly that will look like. ERTC is being talked about. The second one's being talked about extended for 2 more quarters. But so that's just another thing to consider, is if you had a better year, you may almost want to kind of sit
Sure.
tight as an individual.
Yeah. And that's certainly another thing we've seen, right? It's been feast or fathom. Companies have done really well or not, and there's not a whole lot in the middle. So really good points that you bring up.
Yeah.
Well, I appreciate your time today, and we're hoping to really push this out, not only to our members, but businesses across the region, because this is so important. And I would just like to say again, thank you to Postlethwaite and Netterville for all you guys do, not only for the chamber, but sincerely for our community. You guys are very active in the community, and we appreciate it.
Thank you
We're
for
happy
having
to
us.
help and happy to be here.
Yeah, absolutely. So thank you again for being here. Thank you again to Atmos Energy for sponsoring today's Vision and Voice. And any questions you might have, you can direct us. Visit our website at jeffersonchamber.org. Thank you.